Okay, so yeah, hopefully he'll make it in, but let's get started because the thing about this subject, it's going to be, um, like everything else. It's amazing how many calls you start getting now that people are, oh, so it is happening. Okay, all right,
Yeah,
so
for
let's
sure.
dive in. All right, let's go for it here. Here we go. All right. Oh, there is Mark, so we're just gonna allow them in. Here we go. He came in the other way. All right, welcome everybody. Welcome to the Core Connects Core Summit webinar series 2021. My name is Oscar Joffrey, and today we are going to have, this is a very different topic, but it's all related to, once again, the Jobs Act and the amendments and the excitement. And just to remind everyone, our discussions here is more of a fireside chit chat, having a cup of coffee or afternoon lemonade here. No PowerPoint presentations. You can hear from the experts directly. It is being broadcast live on YouTube. And of course, we do have it on the KoreSummit website as well to get a hold of these experts. So today, some of them you've met before, but like always, I think it's important for them to get to know you. So Marty, please take a moment to introduce yourself.
Yeah, hi, I'm Marty Tate. I'm a securities lawyer based out of Salt Lake City, and have been, active in private and public finance throughout my career. Been very involved with crowdfunding since the inception of the Jobs Act. That's where I've known Oscar and Mark for a long time now, and we've all gotten gray hairs together in this field. But yeah, so my practice is primarily with in crowdfunding. I do a lot with. I represent a number of the portals. I represent a number of issuers, service providers, and everything in between related to RegCF and do a lot of Reg work as well. So.
All right. So the other person with the less gray hair than all of us, Mark, it's good to see you, my friend.
Good to see you. I haven't seen you in, 2 or 3 hours, Oscar?
It almost seems that
like.
way.
Hey, Marty, how are you? Nice to see you.
Good. Nice to see you too, Mark.
Yeah, just repeat everything Marty said. Yeah, I've been doing crowdfunding since the beginning, represent a bunch of portals, Title III, Title IV, Title II, tons of issuers, all those folks, which we're going to talk about that whole process and what that area is like today.
Yes, today, which is an exciting because now we're 2 weeks away, and
well, maybe or maybe not. That's that's the big question, right?
Well, I, as far as I'm being told, it is January the 29th was the chance when the SEC had a time to roll it back from what we've heard so far. So full steam ahead, moving forward. Obviously, companies are getting ready, but this is really about the funding port or those who want to operate it. So let's start with this part first. So regulation CF, let's give the context of the regulation, what it allows and where it can be done. So let's start with you, Mark, on that, and then we'll move into you, Marty, with that.
Okay, so what's your question? I mean,
my apologies. My apologies. Sometimes I think I state things and I don't realize es mi español, perdone. No, just saying if we could recap for everyone what the regulation CF, regulation crowdfunding, what, how it works, just from a high level,
Okay, sure. Sure.
And then we'll dive into where they can, because that's what the discussion is about, right? Where can you do it?
Okay, so what we call regulation crowdfunding or RegCF or Title III crowdfunding is, for all you securities lawyers out there, it is another exemption. So the big picture, US securities laws, every time you sell security, a share of stock or promissory note, every time you raise money, you have to do an IPO, just like Facebook, and spend millions of dollars and have underwriters and all kinds of things. So that's the general rule. However, of course, since the beginning, the 1930s, it was recognized that that doesn't make sense for small companies. So since then, we have all these exemptions, which you can think of as cubby holes. If you follow this rule, you can do this. If you follow that rule, you can do this. So we have all these exemptions. Regulation D, which many of you have heard about, I'm sure, is its own set of exemptions, not just one, but several. So Title III crowdfunding, which was created by the Jobs Act, signed into law in 2012, is yet another exemption under the US securities laws. It is, however, unlike any exemption that has ever existed in the past because it allows companies, issuers, to raise money directly with non-accredited investors over the internet without any pre-sale approval by any state regulator or the SEC. So this was unprecedented, and that's why at the time, and actually still, it's controversial because many people believe that, you know, all the bad folks out there, people like Mark.
Or did it cut him off just when he said bad people like Mark?
Yeah, it's like Oscar and Marty and Mark. We're going to use this opportunity to steal money from widows and orphans, and many people still think that. But anyway, that's what Title III crowdfunding is. It is a relatively new exemption that allows companies to raise money from everybody, accredited and non-accredited, online with no prior approval and subject to many, many rules, which I'm not going to go into right now because I've been talking too long. But one of the main rules for purposes of this webinar today is that this can only be done through a new kind of licensed company, which has never existed before, the funding portal. So you cannot, if you're an issuer, you cannot just put up your own website and use Title III to raise money. I get a lot of calls from people who would like to do just that, as I'm sure Marty does too. But that's one of the key features of Title III. You can only do this through a funding portal. So now I'll stop.
You never need to stop. I think this is a healthy conversation, and you're right. We all have a passion to it, and today's discussion is really towards, as you said it, this is a great a mechanism that we've been given, but there is one caveat with it. You must raise it on these registered funding portals, and hence the reason for this discussion. So let's start with you, Marty. I mean, the definition of a funding portal. I mean, when you hear registration funding portal, I'm immediately thinking broker-dealer. But let's start with that, the mechanics of it, the starting point. Who can operate a funding portal?
So, like Mark said, it was this new creation, and funding portal is something, you know, is actually or a licensed intermediary is something that is it's kind of like a broker dealer light. It's basically a entity that has been established to conduct these specific types of offerings and assist with these specific types of offerings. A funding portal, they're only licensed to do Regulation CF or Title III offerings. So unlike a broker dealer that could assist with other types of offerings, funding portals can only do Reg CF offerings. And in order to do that, they have to be like a broker dealer. They have to be licensed. They have to be approved by, they have to be licensed with the SEC and approved by FINRA. So that's kind of the difference. That's who can do it now, I guess. And yeah, I guess I don't want to get too much in the weeds, but the who to it could be, U.S. entities, certain non U.S. entities could also go through the process and be licensed if they're from certain jurisdictions. And I won't bore you with the details of that, but that's the who.
Okay, so that's an important factor here that, as Mark alluded to, we've opened it up in one way. We even opened it up in the way it can be done through we call it broker dealer light, but they're not really broker dealers. They're just everyday individuals who have want to launch a platform for the veggie space or the space, whichever it is. And as long as they qualify under FINRA, they can apply. What you mentioned something there. I don't know if you know this one, Mark, but what jurisdictions are allowed to own a funding portal from outside of the United States? Again, given that they're only dealing with US companies, but where can these entities come from? You're on mute, my friend.
I know. I thought I could press my space bar to unmute, but that didn't work. So the answer is it theoretically can be anywhere. You can even operate a funding portal from Alabama. No, I'm just kidding. You can theoretically operate a funding portal from anywhere outside the United States, as long as the jurisdiction where you are operating has an information sharing agreement in place with the Securities and Exchange Commission. And there is a list, I wish I remembered the URL. There is a list of jurisdictions that do have such agreements in place. And they're from the normal suspects, our major trading partners and so forth. Certainly fewer than half the countries in the world, however. So, so you have to be careful, and you also have to be careful about lying, because I've seen funding portals get into trouble. They said they were US based and they were US companies, but it turned out the folks making the decision, when they woke up in the morning, they did not look out the window and see the United States. They saw a different country. And the FINRA found out about it, and they got in a world of trouble. So it is, something. This is funding portals are unlike, if you've been in the world, the unregulated world of Regulation D and even Regulation D private offerings. This is different. You get into funding portals and FINRA, you are dealing in a regulated world. So it is.
But you touched on something, Mark.
Different.
You said something there that just kind of, okay, so a entity from a foreign country can own the platform, not be in the United States, right? But in this case, was it because the country that they were from was in the blacklist? So you have to be in the country, or even, let's say Canada. I'm a Canadian. I want to register a funding portal. I disclose I'm Canadian. Can I still reside in Canada, or do I need to reside in the United States? Well,
Canada is going to be one of those countries that has a information sharing agreement with the United States. But the point is that what matters is where the person lives, where you wake up every day. So, if you live in Kazakhstan, that is going to be treated as a non-US portal, even if the company itself is a Delaware corporation. That's the point.
Sorry, I was just going to weigh in. And to that point, and the person that Mark's referencing is the person who has control, or the people who have control of the entity. If you have, I work with a platform and they've got people all over the country, but those people aren't making decisions. They're not the owners. They're not the control people of that funding portal. So that's all right. So it really comes down to where the control people are located.
So the major shareholder of the company, the decision maker, that's ultimately, as you said, I look out my window and I see Bahamas. That's what I have to say. I am a Bahamian company. And in as long as there's an information sharing agreement between the US and Bahamian about Bahamas, I can register and so forth. That's an interesting, I like that. I've heard that analogy from you before. And it's one we need to, the only reason I bring it up, because it's interesting. I'm being invited to speak elsewhere in different countries now because people are saying, wow, there are people out there saying, hey, listen, RegCF is doing really great. We can bring European companies in here. And I go, whoa, put the brakes on a little bit, And then, of course, as soon as you hear that, people are saying, wait a minute, why don't I launch a platform? I'm from over here. I heard I can do that. That's why I drew all of this. I think the general audience particularly already knows, but it's a good reminder to tell everybody the specific requirement. So one, who the majority owner is, or the major shareholder, the decision makers, and what country you reside in. And as long as that country has an information agreement with the US and the SEC, boom, we're a thumbs up. You two are willing to take them on as clients, and away we go. So besides those elements, obviously, can we walk through, Mark, just a few of the other regulatory items they're going to need outside of, let's say they pass ownership level 1. What's the next item that they need? Because it is a process that you put clients through in this, right?
Yes. And the interesting thing, and something that surprises many people, it's a good surprise, is that anybody can own a funding portal. There is no license required. You don't have to have any FINRA licenses. You don't have to have a Series 7 or a Series anything else. Anyone can own a funding portal, and that causes some of my fellow securities lawyers a lot of angst. They just think that's awful, but it is true. Two steps. One, registering with the SEC, which is easy, and 2, applying for membership of FINRA, which is not easy. Although that can be arduous, eventually you get approved. If you answer the questions and submit the right pieces of paper, everyone gets approved. Absent, you were just convicted of securities fraud or something like that. But you will, people ask me, I'm sure they ask Marty, well, what are the chances that I'm going to get approved? And I tell them 100%, if we do the application the way we're supposed to and we answer the questions. So it's open to everybody. I mean, that's another thing about Title III generally. We talk about the democratization of capital. It makes capital available. It makes investments available to ordinary Americans. And the whole industry is open to anyone who wants to get involved. You don't need a high school diploma to create a funding portal.
Okay, so you may not need that, but there's, like everything else, just the same way companies need to prepare for going for due diligence and doing that, the preparation for anybody coming in. So we now know anybody, you live in the US and all that, you don't even need a high school diploma, you can apply. So what are the requirements in that application that they need to provide, Marty? What is it that they need to come prepared with? Like the one thing that I think the only way to make an industry more transparent is that, to your comment, Mark, anybody can run it. If I'm an investor listening to this thing, I don't have warm and fuzzies. I get it that, because FINRA does go through. I mean, I have a number of clients that they're still waiting for FINRA approval. So clearly there is a lot of data that SEC requires in FINRA. So let's go through the first step at the SEC application. What is that entail? What is it asking besides the ownership that the company needs to have ready?
So the SEC, as Mark said, the SEC application is easy. And it's not a ton of information. It really just is the information about the who the funding, who the entity, who its principals are, the owners and the executive officers. You have to make certain representations about, basically go through a little bit of a background check, just by checking boxes, but the process is really quite easy with the SEC. That being said, so that's like Mark said, that's an easy process. The FINRA process takes longer, and again, there's an application that you file, but there's pieces to that application that you need to become prepared with. There's in addition to all of your organizational documents, you need to have really documentation for everything having to do with the entity. You also have to, one of the things FINRA really wants to look at is where the money's coming from. They want to understand who has financed the funding portal. So if you have any loans, if you have any investors, you need to be prepared to provide bank statements and wire transfer documents for all of those transactions. And, I just got done doing one application for a company, and they had, several dozen investors. And that, that was no less than a proctoral exam for this funding portal, because each one of those investors had to provide tons of information. So that's part of it. And then there's things that Mark can talk about, or one of us can talk about it, such as written supervisory procedures. And there's pieces of the application that are standard that need to be formatted and customized for each of the issuers.
One thing that neither Marty nor I has said, because that's just how our brains are working, but the most important thing that anyone who wants to become a funding portal needs is a website. Yes. As I mean, it's such a big elephant in the room, we're not even noticing it, but most of the extensive regulation around Title III is manifested in the website. So the website in Title II or Title IV is easy. Here are these deals. You want to invest? Click now and invest. Not so in Title III. There's all kinds of functionality the website has to have. And when someone signs up, they have to get a notice, and the notice has to say this. And then when they invest, they have to get 17 notices, and each of them has to say this, and all kinds of functionality. So I tell people that there are 3 legs to building a funding portal. One is the website. 2 is the legal stuff, all the applications Marty and I are talking about. And 3 is marketing, to get deal flow and to get investors signed up. But that first one, nothing happens without a website. And some people, I would say half my clients, decide to build their own, and half license them from a provider. CrowdEngine is the market leader, but in my experience, about half do and half don't. But one way or another, you need a website to become a funding portal.
Well, okay, but let's just be careful. You said website, and then you're putting CrowdEngine into the picture. CrowdEngine is a funding technology, but when you say website, we're talking about having, www.iwanttoinvest.com and having something in there, or are you referring to actually having the funding portal at the same time? I just want to get clarity on that. I think you're on mute again.
Yeah, so I'll take that. So the website, again, and by, I think when Mark says having a website, it's basically having the technology there, the
The
funding portal
functionality.
technology.
Okay. Yeah.
Because it's not just a website, but that you know, the portal, which is the website, right, that's I mean, crowdfunding is done through the internet, so, or Regulation CF is done through the internet. So the FINRA is going to spend a lot of time looking through that and not only making sure it has the functionality, all of the required functionalities, which again are not required in these other types of offerings, but there has to be there's a very specific set of requirements and disclosures and notices that have to be part of that technology suite, and you know, that's all on the website. But there are on the portal, the website.
Yeah. It just sorry, just to be clear, there's a big distinction between a website and a. So I get it, a funding portal, which it's it's the cosmetic of what it does and the application itself. Which so the real meat is what I heard is the SEC application. I'm just recapping it lightly. The SEC application is the easy part, high level stuff about the company, who you are, ownership, boom. But it's the FINRA, the more detailed due diligence that they're grilling into the company. You mentioned something really interesting, which is the money that came in to fund the company and the sources of capital and the wire transfer. So not to say Marty invested 10,000, they want to know how he moved the money in. And then you mentioned something else, you blurred a little bit, where they're actually doing a check on Marty. Marty needs to provide additional information. What kind of information does that investor need to provide? Are they doing like a background check, ID, AML, OFAC? Is that what's happening there? Sorry, I'm asking you, Marty.
Yeah, so I think FINRA does. FINRA will do a background check. They'll want to make sure they know who that person is. We've had just the company I was talking about that had dozens of investors. A lot of them were non-U.S. citizens. They were so they asked us to provide full OFAC checks. So a lot of that, I don't know how common that is. Maybe that was just because these were non-U.S. citizens. They wanted to do that. So it's FINRA's job to understand who is not only running the portal, but who's invested in the portal and who's participating in it. That's, I think, part of the diligence.
So that's a good breakdown. So from a company point of view, come prepared when you come into guys like yourself to getting ready. Because look, I think what I've heard on the other side, I'm going to share with you guys what I hear. I wish lawyers would tell us what we need in advance. So the lawyers are doing it already for RegCF to do the Form Cs. Firms like Sarah, they're doing it for Reg A. They're giving the client the checklist, get them ready. Like we talk about it, but in it here, I'm pulling at it and I'm trying to figure out why. So now I understand I'm going to pick on the both of you because you guys are doing a lot of them and there's more going to be coming because I think it's going to hit to people's mind. Hey, wait a minute, this is a good business. I could help out. There's 233 million Americans, lots of room for another player. But for any company coming in, it's like everything else. First, do I qualify? Do I have everything ready? And then making sure that they have all this so it doesn't delay. I heard from one client, their exact comments to me were, working with a lawyer in this process is like peeling an onion. That was their exact term, peeling an onion. Every single time I peeled it, and it made me cry because I knew I had to go back. But what I would have liked is if at the beginning, they gave me everything I needed that I needed to come back with so it could expedite, because all it did, it delayed my ability to go forward. I'm to blame. I got it, but I didn't know. And so that's where this is. And I
let me say something about that. I bet Marty, having been through this process so many times, I do my best to do exactly that. I lay out right in the beginning all the stuff we're going to need, everything
Good.
addressing every possible issue. But it doesn't work because FINRA unfailingly comes back with questions that they have never asked before and requirements that they have never imposed before, and questions that have not only couldn't be anticipated, have absolutely nothing to do with the application. I've had the experience over and over and over on a lot of issues, but with respect to the policies and procedures that FINRA requires. So what's happening is these policies and procedures are becoming like barnacles on the bottom of a ship, layer after layer after layer after layer. FINRA never says, you know what, we don't need that. It's always, well, although the last 4 applications we approved in this format, for this new application, we're going to require 3 things more. And that happens over and over. I had one experience last autumn where we had made yet more additions to the policies and procedures with the examiner. Finally got approved, fine, wonderful. 2 days later, representing another applicant, I got a letter, and having submitted those revised policies and procedures, I got a letter from an examiner saying, well, you need to deal with these 3 other things. And that would have been frustrating enough, but it was the same examiner. It was the exact same examiner who had just approved, this stack, and writes back, nope, that stack's not, this week that stack's not good enough. And I know that for my clients, that's very frustrating. And they're thinking, Mark, why didn't, you've done this so many times, why didn't you
No, and I respect that, Mark.
It's just impossible. FINRA is just, it is a very, and I try to warn people up front, it is a very, very, very difficult process dealing with FINRA. That is my experience.
Well, actually, I think that's a good thing for you to say. I don't, I have a different respect for regulators, meaning that I get it. They go through the checks and boxes, and the SEC, I'm going to give them full credit. They're agile. They're moving the needle. And it's frustrating. I get that. But there's a basic, let's call it a basic package you need to come ready with. And after that, obviously, it'll get more complicated, when people start doing different types of models they haven't seen before. And believe me, there's been some new doozies that we haven't seen before. So it's exciting, but I think that gives, for anybody that sees it, yes, it's easy to apply, everybody gets approved, but as you just itemized, it's a grueling experience that you have to go through to undertake. And there is a good chance you may not get it. I have met a company that didn't get it.
There had to be a reason for that.
Yeah, of course. And
you don't just get denied. They had to maybe have reached their point of frustration. They got tired of paying for it. But right, I mean, Marty, I'm sure all of your clients get approved eventually if they answer all the questions, right?
Yeah, eventually. I think one of the issues I've had. One of the issues where one of my clients, we went down the process. It was that issue with the being a foreign controlled. We tried to argue that there was an information sharing agreement because there kind of was, but it wasn't one that was approved by the SEC. We tried some other things and then ultimately gave up. So that type of thing happens. I had another person that just, frankly, they weren't prepared, and it wasn't that we hadn't prepared them. They didn't have the and I've only seen this once. They didn't have the financial wherewithal. Like the FINRA just kept trying to dig further. Like, where are you getting this money? How is this money coming in? They couldn't answer the questions. They got frustrated, and that was that. So those things can happen. But I do want to reiterate what Mark said. It's every time it's a different thing. This just this last month, I had one of my clients super frustrated and said, "Why are they asking this? Why have you ever seen this?" And my honest answer was, "No, I've never seen them ask that before."
I think they're going to increase it, guys. If I'm FINRA, we just upped the game. I mean, we're upping the game to 5 million. I mean, now they got to ask more, and I think they should. I think if we're going to instill some level of confidence in the market, I think it's good, and I think it's important for anybody who's looking at this. This is a serious business, and the fact that it can be easy, of course, but you need to be ready. I mean, the whole concept of being transparent, everything from the minute you brought in a penny to it needs to be disclosed, tracked, and everything in order for you to go through, to make it simple, as Mark said, and both of you. But if you're going to be tuck and tail, I mean, I do have a client like that where I don't want to disclose our shareholders. And I go, well, good luck with that, because I don't know how you're going to go through crowdfunding regulations, because that's going to become available to everyone. So it is rather interesting to hear this, and it's good to hear it. So we talked about the money. The money seems to be a big one, which I do agree with one part. Some people think something is easy. So, oh, good, I'll get in there and I can be up and running in 2-3 months. But it could take 6 months to a year, and the company needs to be financially viable during that time as well, right? That is, along with all of this, making the investment to the technology, because eventually FINRA says, okay, it's time for you to show it to us. So that's another financial commitment they need to make to a vendor like CrowdEngine or WealthLog.ai or whoever it is out there that's providing these technologies. Or if you build it yourself, you need to be able to demonstrate it to them as one of the requirements before they can give you the qualification. So what else beyond the functionality, the money, the ownership? I know we talked about policies and procedures a bit. What else beyond those elements should an individual or an entity getting ready to do this should have ready in order to make sure that their process is smooth and easy? Marty.
One thing that I would say, just as you were talking, I was thinking about this, is that the people going through the process, I mean, the more that they, and this a lot of times does relate to capital, and having a team that's built out, having a game plan, knowing what they're going to do, knowing how they're going to go about. Mark talked about the three-legged stool of the platform, the sort of legal application, and the marketing. Having all of those pieces in place are really important. But I think it's absolutely crucial that they understand the regulations, and they understand how it works. I think sometimes clients will rely really heavily on the lawyers through the application process. And one of the things that FINRA does is they'll do one or more interviews where they'll go through that website, through that platform, and they'll make sure that it has all the functionalities. And they're going to ask you specific questions. Again, it's not on the spot like you're being tested, but they'll want to say, okay, well, how does this comply with this rule? Or show us where these notices are. And I think that people, it's not just hey, we can throw something up and start making money. This is a highly regulated industry, and they have to know what they're doing. They have to understand those rules just as well as, or at least have somebody on their team that understands those rules, just as well as we do. Because I don't think it makes a lot of economical sense for somebody to pay Mark or I to babysit and continually be reviewing it. They need to know how to run it and have that knowledge and compliance piece in place.
Yeah, thank you for that one. I was going to touch on that, but Mark, I'd be interested to hear your comments on that.
I mean, Marty's absolutely right. I mean, you have to have enough people, which doesn't have to be a lot in the beginning. You have to have the systems in place, which FINRA does ask about. There's a lot of different systems you need. Besides the obvious ones, the Title III regulations require all records be stored in WORM format. Write once, read many times. A lot of people are not aware of that, and so you have to find a worm provider, put that all in place. But what I do tell people about when I give them the speech about the three-legged stool, which I always do in our first conversation, I say, certainly if you're white labeling your software, your technology, your website, what I call the website, then you don't have to worry about that. If you were using a reputable attorney like Marty or me, then stop thinking about legal stuff, because you don't have to worry about that. We're going to take care of it. It's marketing, 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 marketing. Since 2013, every time I speak about crowdfunding, I say crowdfunding is a marketing business. It's not a technology business. And it is not a situation where you build it and they will come. So how do you get high quality companies to come list at your site? And how do you get investors to come at to your site and start investing? I mean, that's what I tell people in our first conversation, that from now on, if they've got the website taken care of and the legal taken care of, they better spend 95% of their time on thinking about marketing, because there's no one out there that they can pay to do it for them. And so that's what companies, that is ultimately what determines the success of a crowdfunding portal, just like so many other businesses.
Agreed.
So,
I mean, there's a question that I often get asked, or I need to remind people, as much as we're getting a lot of new platforms, which is great funding portals, I always go back to, prior to this announcement of the increase, there was already 51 registered platforms, but out of those 51, there was only 8 that actually had any activity. And out of the 8, only 4 or 5 owned 99% of the market. And what do they all share in common? Marketing, marketing, marketing. I mean, we have one that, it uses, celebrity status to gain attention, like Start Engine using Kevin O'Leary. It's ironic, a US platform using a Canadian. that was so, and then there's micro ventures and we funders and Republic going more from the AngelList world. So I do agree with that. I would say that based on a lot of the platforms that I've seen, and the ones that aren't there, I would say the number one issue is they're not spending any marketing, and they have this philosophy that companies are always looking for money and they will find me. It's a really wrong approach, because that's not the way it works. But that's number one. But number two, I wonder how you all feel about this. I've been using the terminology Heinz 57. I think you've heard me say it before, Marty. But I got a better analogy for it. It's sort of like a supermarket. So I go to a supermarket. So, I'm going to call it Loblaws. I go into Loblaws, and, I go in, and lettuce is there. Right beside it is my cereal. Nothing is in areas stacked up. I don't know where I'm going, and it's moving around. And then you have a shopping mall called Republic, and everything looks the same. The only thing I need to do is choose which one I like. So what am I getting at? A lot of the new portals, they've gotten through and all that, and now they want to appease everyone, and which is, I want to offer debt, I want to offer equity, I want to offer the save, and I call that the Heinz 57. Meaning you want to be like this because you go, look at those guys, they only do 1 or 2 and that's it. They need to provide choices. What do you guys feel about that? How do you feel about making it one or 2 kind of securities you offer versus many? I have my reasons for it, but I'd love to hear your comments on that first. Mark? Well, he's on silent again.
No, here I am. I have a lot of noise in the background. I don't want to bother you.
It's okay, bud.
I think it's a great question. I believe that the well, I guess one thing I want to say, which is relevant to this question, but overall, is I hope that people starting funding portals today do not simply copy what some of the other, in particular, the large funding portals have done. It's a different market now, at least it will be when the rules change. A lot of what the existing portals have done is not very good. It's not good practices, it's cutting corners. And they've done it because you couldn't make money as a funding portal up to now, because the deal size were just too small, the dollars were trickling in, you couldn't make money. So they've had to use all these tricks and shortcuts and rounding corners and kind of deception. And so I hope people listening to this presentation who are starting portals today will rethink the model. It is about to become a very, very profitable space. But now, responding to your question, I do think, Oscar, that the crowdfunding market, it's not just the old-fashioned private placement market getting bigger. As the industry scales, you have to rethink it. It is a mass market. It has to be a mass market. It is, for it to be successful. And in mass markets, you are correct that you don't get 27 different kinds of securities. Everything has to be standardized. The documents have to be standardized. The company formats have to be standardized. The types of securities have to be standardized. The disclosures have to be standardized. So the whole industry has to move in the direction of making it easier for investors to pick and choose. They have to be able to, has to be apples to apples to apples to apples. It can't be 17 different kinds of fruit on the same funding portal. So exactly what the answer is, I'm not sure, of course.
Okay.
But I agree with you that it has to be narrowed.
Marty, what are your thoughts?
Yeah, I think so as well. I do like that there are some, that there are some, and maybe it just has to do with the platforms themselves, but there are some platforms that have like specialized models, like revenue sharing agreements. And
that's different. That's different. I like those.
That I think, makes sense. But yeah, going to like, if I have a client that wants to be a platform, and they, and they've said that they're like, we want to do debt deals, and we want to do safes, and we want to do equity, and we want to do, I've said the same advice. I said, well, let's try to focus on one thing that works. Now, that being said, I represented an issuer a couple of years back, and they were doing an offering on WeFunder, and WeFunder's like, no, you've got to use a safe. And I didn't want them to use the safe. They didn't want to use the safe. They just wanted to go out with just, with just straight equity. But that WeFunder said we do safes. So I don't know. That's not the topic
I'll
of
tell
this.
You,
but
yeah, I mean the advantage. The thing about all of this is that our conversations are going to get very, very interesting from different perspectives, because the more data we have, we can now share it, and that data guides us. So here is things that we can share, that we can tell you. So we house, hundreds and thousands of investors, both in Reg A and RegCF. And we understand the challenges that people have. So give you an example, when a RegCF investor goes to a Reg A deal, they'll invest, but after they're done, they're majorly confused. They're confused because they got a share. They didn't get a share, the safe instrument. Now they need to know what a share is. And then we've had companies where they've added another quirk to it. They've added a warrant. and they don't even have a clue what the warrant means, let alone that it's got a price on it, which is higher, so it's confusing. The reason I bring all this up is because
I told you about mine.
There was one funding portal that we're talking to right now is going to offer for a number of selections. And I said, you know what, that's great. You know, I understand it, because no two companies are alike. I said, I get it 100%, but here's my challenge. How are you going to support it? And he goes, what do you mean? It's just legal instruments. No, how are you going to be able to support this in the market? Oh, it's okay. I brought in an expert in each area. So they're putting in all the dollars and cents into experts to be able to help the issuers and all that set up a deal. And then I'm going to come back to what Mark said. Mark said, item number 3, or number 3, get your stuff in order for FINRA. Make sure you got your legals, your functionality, and all that, and your policies and procedure. And most important, marketing. So if now all of a sudden you're putting all this effort into adding bodies into your team to explain it for one investor, because see, it's not about copying Republic or WeFund or Start Engine. It's not about copying them. It's to understand how the crowd is reacting. So if all of you don't recall, when Republic first came out, a lot of people said the crowd safe would fail, because they call it for them, they renamed it safe to call it a crowd safe, and they trademarked it, right? So it would fail. And at the beginning, it wasn't getting the traction and it wasn't. But look at them now. In a few years, they've become number 2 in the space. They've trained a crowd to look at an opportunity. So, and it's interesting, as they bring other products like real estate and all that, they're placing them differently, but they're careful to make sure, and everybody needs to be careful with this, because we have a very young investor base, and I don't mean by age. I mean young from the perspective that this is the first time it's been offered to them. There's a lot of questions they have. So the experienced investor, the accredited, even they have questions. What's the difference between a promissory note, a debenture, and all that? So I'm a big believer that Heinz 57 does not work in a RegCF platform at the beginning. And I say this at the beginning because you're right, Marty. At one point, WeFunder used to say no. WeFunder is now saying yes to shares, but they're maturing. Do you see what I mean? At one time, they would say they wouldn't do that, but now they are. Why? Because they have enough of a base, they have enough support staff for marketing, and to have a team to educate people what a share is, how does it work, what are your rights, what you can do with it, right? They didn't have that before. You have to think of all of those things. So if you need to market your platform at the beginning, and you need to focus on bringing eyeballs, because they're not going to just come to you. A lot of them are spending so much time in the back office, Mark, you wouldn't believe it. Oh yeah, I got to have the technology. Just go to Crowd Engine and you're done in 5-10 minutes. Okay, so that's done. The fear is you got to get out. You got to get out there and start marketing it. So this has been, to me, that was the one piece I wanted to throw in there, because I ran into a few portals where I like the revenue share. We share that client in common, Marty, you and I. I like it. I think it's simple. It's easy. I mean, the difference between one or the other will be percentage. You see what I mean? That's an easy model. I think that's innovative. I remember in the early 2012, somebody said they were going to do it. They never did. But now with $5 million, it makes a lot of sense. And platforms are going to make money. I mean, something's got to be said about, eventually the crowdfunding sector will pop up a unicorn, and whoever the funding portal was, as most funding, if you guys have seen most funding portals, they participate in the raise. They take a piece of the equity along with everybody else to make part of their fees and not just taking it. So it's a very interesting market. So I just want to get some closing marks from each of you, because Mark, I mean, advice, you said you prepare them with each of the companies. Is there something on your website that you have that can help companies get that generality, and then boom, they can contact you and then get started. Love to get your closing remarks on that.
You cut out a little bit, actually,
I'm sorry.
Oscar, but I'm happy to make closing remarks. I think immigration is the pressing country. No, I'll make closing remarks about anything.
State of the Union, my friend.
Yeah, State of the Union. I think the best closing remarks that I can give, I believe, for this topic are to echo something that I said earlier. So up until now in human history, the way companies raised money was under Rule 506. Gigantic market, usually accredited investors only, but sometimes non-accredited investors. And that was by far the hugest market. With the advent of the new rules, and by the way, I'm not so sure they're coming into effect on March 15th, but that's a different discussion. With the advent of the new rules, Title III is, having been a really bad neighborhood for the past 5 years, is going to become the best neighborhood. It is going to become the focus of private capital formation in this country, and just a multi-billion dollar market. That's what I think. I've been doing this for the whole history of the country. So that's my perspective. It is going to be wonderful, fabulous, lots and lots of opportunity in this space. So that's my closing remarks.
Thank you. Marty.
Yeah, I'd agree with Mark. I think that the increase will definitely, I just think you're going to see bigger, better deals. This will become more standard. I work with a kind of a consulting group, broker dealer, that that's their new model. I mean, they've come to me and said, hey, we're going to have all of our companies go through this. This is how we're going to raise money, is through
interesting.
RegCF. So I think that's I'm excited about it, and we'll kind of see what happens.
Well, it is rather interesting. You mentioned that. We didn't get into that. That's another discussion itself, is that you said it. We said that it only be at our registered funding portal, but there is a new entrant into the game, and the broker dealers have now woken up. We've now woken up the gatekeepers, as people used to call them, and they're embracing it. They're now saying, wait a minute, $1 million, okay, no, but 1 to 5 million, Mark, you said it, you can make money on it, and it touches into their market. So listen, it's always a great discussion. I know it's hard to kind of go through it because you guys are dealing with it day in and day out. Our focus at CoreConnect has always been about education, trying to help the market evolve. I believe there's a lot of good ideas of people that want to do it. Sometimes they're scared, they're not quite sure. And just we want to be able to guide them in that direction. Marty, Mark, you guys are right there. You've done it before. And we're always excited about the fact that people have that source. So I want to thank you both for joining us today. For everyone else, thank you so much for joining us this afternoon. Just a couple blurbs. On March the 15th, during that whole week, Monday to Friday, we are going to have, well, we're anticipating that it's going live. So therefore, that day starting off with we call it the State of the Jobs Act 2021. We're introducing the father of the Jobs Act, David Wield, with Vincent Molinari as our host to have a discussion of where it was, where it's going to, and it's going to be an amazing year, 2021. Thank you both. I can't wait to talk to you guys again soon. Have a great afternoon. Talk to you soon.
All right.
Cheers.